India.
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 India is capturing the world's attention, and its rapid growth, huge population, and potential for the decades to come could make it the world's next great superpower and bring it to the sphere of relevance of economies such as the United States and China. Will it take advantage of this historic opportunity? Modern India was established in 1947 with the end of the British Raj and the partition of the territory into the states of India, now the Republic of India, and Pakistan, now divided in the Islamic Republic of Pakistan and the People's Republic of Bangladesh. Although during its first decades India maintained a strong centralized planning of its economy, the economic crisis of 1991 and the fall of the Soviet Union, its main trading ally, forced the country to implement a series of reforms to get out of this crisis, including the liberalization of its economy with a more market-oriented approach and the expansion of the private sector. And since emerging from this crisis, India has been characterized as one of the fastest-growing countries in the world, consistently rivaled only by China. And over the past 10 years, India's economic growth has been close to 6% on average, doubling its economy and rising to the fifth largest in the world, with the prospect of overtaking Japan as the third largest before the end of the decade. Let's take a look at its economy. Its main sectors are financial, real estate, and professional services with 22.6%, trade, hotels, transportation, communications, and services related to broadcasting with 18.7%, manufacturing 17.3%, agriculture, forestry, and fishing 15%, public administration, defense, and other services 13.7%. Its main exports are refined petroleum, packaged medicaments, diamonds, rice, and jewelry, with its main destinations being the United States, China, the United Arab Emirates, Hong Kong, and Bangladesh. And its main imports are crude oil, gold, coal briquettes, diamonds, and petroleum gas, importing mainly from China, the United States, the United Arab Emirates, Saudi Arabia, Iraq, and Switzerland. Regarding its economic freedom, despite the reforms, India remains mostly unfree according to Heritage Foundation, ranking 131 in the world and 27 in the Asia-Pacific region. According to this foundation, property rights are difficult to legally establish and property titles are not always reliable. The judicial power is independent, but the courts lack staff and technology. And large-scale political corruption scandals have repeatedly exposed bribery and impunity for this crime. The top individual income tax rate is 30.9% and the top corporate tax rate is 32.4%. Other taxes include a goods and services tax. The general tax burden is equivalent to 6.8% of total national income. Government spending has amounted to 28.2% of the economy in the past 3 years, and budget deficits have averaged 8.7%. India maintains a debt of around 89% of its economy, and the bonds issued by the country are ranked in the main risk rating agencies as of good quality. India is generally an economy open to international trade, with 17 preferential trade agreements in force. The trade-weighted average tariff rate is 7% and 358 non-tariff measures are in force. India's overall investment framework remains expensive, although ownership restrictions have been eased in some sectors, but state institutions dominate the banking sector and capital markets. And despite having some problems on this front, which are solvable, India has a very important feature in its economy and its future, its demography. India will become the most populous country in the world this year with more than 1.4 billion people, and its population will be an essential part of its economic growth. In the first place, because the size of an economy is given by the production per person multiplied by the number of people, and if this number expands without the production per person decreasing, then the economy will grow. Secondly, and more importantly, because the population pyramid of India, which follows a traditional shape, with the youngest people being the most numerous and the oldest the fewest, allows them to have a large number of young labor, a high internal demand, the possibility of supporting older people who are not working and having a future replacement generation. Thanks to the number of people of working age, India's dependency ratio is less than 50% and has fallen over the last 50 years. This allows people of working age to have more money to invest, start a business, and educate themselves without having to allocate most of their resources to children or the elderly. And China, which serves as a benchmark thanks to its massive population, saw benefits from both, and according to the researchers Fang Kai and Yang Lu, 24% of China's economic growth in the period from 1978 to 2010 was due to the way in which its population grew. In other words, what caused about a quarter of the country's growth was growth population and the rate at which this growth occurred. Because since most families were limited to having one child, the dependency ratio was low, and they were able to save more and accumulate more capital to invest. And although as India develops, the fertility rate will fall and it could face the same problems that China and Japan are facing right now, this would not be for a couple of decades, so it has a great room for maneuver to avoid the mistakes of other countries. Regarding energy, in 2021, more than half of India's energy came from coal with 56.7%, followed by crude oil with 26.6% and natural gas with 6.3%. Most of this coal is imported from Indonesia and Australia. India consumes about 5 million barrels of crude oil per day. It produces 700,000, and the rest is imported in more than half from Iraq, Saudi Arabia, the United Arab Emirates, and Kuwait, taking advantage of their privileged position next to the Persian Gulf. And as for natural gas, India produces about half of the natural gas it consumes, while the rest is imported in the form of liquefied natural gas from Qatar, the United States, and the United Arab Emirates. It is important to clarify that these numbers, from 2021, show the general map of energy imports from India under normal circumstances, but 2022 was anything but normal, and India, which did not take a position against Russia over the invasion of Ukraine, has bought Russian oil at discounts of up to $30 a barrel for much of 2022, and Russia went from supplying around 2% of oil to around 20%, surpassing Iraq as its main supplier. At a financial level, its stock market, measured through the Nifty 50 index, which tracks the 50 shares of the largest companies listed on the National Stock Exchange of India, has gone from 10,680 to 18,100 in the last 5 years, reflecting a growth close to 70%. It is possible to invest in this index for people outside of India through an ETF such as the iShares India 50 ETF or the First Trust India Nifty 50. However, due to the depreciation of the Indian currency against the US dollar, the profitability of these ETFs has been much less than 70%, with a dollar going from buying 63 rupees 5 years ago to being able to buy 82 today. The radical demographic change that the world is experiencing is causing a headache for developed economies, which will find it increasingly difficult to find young workers, and this represents a huge opportunity for India, which also joins the initiative that some companies have started to implement known as China Plus One, and with which they seek to diversify their supply chains, which after several decades of investment, had become excessively dependent on China. And companies like Apple, Samsung, and Google have begun to diversify their production to India, which, of course, will not be a quick change, but which also has the objective of taking advantage of what could become one of the largest markets in the world in the coming years, as more people in this country begin to form part of the middle class. And do you see India as the next great economic superpower in the world, or is it still too early to tell? I would like to know your opinion. See you next time.